we're talking supply and demand, consumer prices, and some risk management. Hello, I'm Meghan Grebner, your host of the Weekly Livestock Market Update. On Brownfield with us this week is University of Kentucky livestock economist Kenny Burdine. Welcome, Kenny.
Thanks. Good afternoon.
Good afternoon. It's good to see you. We'll dig into those reports coming up in just a little bit, but first, let's recap what happened this week in the markets.
Yeah, let's start rolling through some things. Quite a bit going on. Generally down on the cattle and beef side, and generally up on the pork side. So let's just kind of jump right in, Megan. So, 5 market average fed steer price down over $4 for the week at 202.73. February live cattle futures were also down by about 3 for the week, closing today at 197.73. Choice beef slid about $7 on the week, going to finish at 314.70, excuse me. And then select box beef also fell by about $5 to 307.14. One observation I'll make there is that difference between choice and select has been narrowing, certainly since first of the year and probably going back further than that. So I did kind of make a mental note of that. On the positive side, on the cattle side, March feeder cattle futures prices actually gained a little ground last week after a tough week the week before. So they closed about $2 higher, with March going off the board today at 267.08. Hogs, where I said generally positive. National base hog carcass price was 3% higher, 86.09 on the week. February lean hog futures were $2 higher, coming in on the week about 89.48. Pork cutout was also higher by about $5, broke the $100 mark, 102.21 on the week.
When we look at some of these things that are happening, obviously, I would assume prices on the cattle side can only go up so far before there's a correction. Is that just is this not surprising to see us pull back like we have this week?
I don't know that it was. We had some things that came out that may have had some impact. We talked about the imports from Mexico, which that shouldn't impact the fed cattle markets that quickly, obviously, but the fact that it's out there, perhaps. The trade talks and uncertainty, don't help any that's out there. And then the third thing, and I don't know how much emphasis to put on this, but the AI and poultry, and then more cases and more testing in the dairy sector. I don't know how to weigh all that, but I think you've got a market that's been on a tear, to put it simply. And when you do get some negative news, the fact that we had a pullback, I think, isn't shocking. And again, it's February, right? I mean, we're talking about incredible prices, and to see things pull back a little bit in February really is not that shocking seasonally anyway.
And then on the hog side of things, the opposite, right? We're starting to move higher again. Is there some seasonality in some of that?
Possibly so. And, I don't know. It's all, you always think about kind of the substitute, back and forth and things like that. But no, the hog market I think the last 2 or 3 weeks really has been pretty impressive. We'll talk about slaughter in a second, but I think also that, that also comes into play, that we've seen some differences across the species and how much actually we're moving through these plants right now.
And I would have to assume maybe some of the immigration and some of those conversations maybe are coming to effect on the slaughterhouses, knowing that there's maybe some volatility we might see in runs there.
I think it's possible. If you look at beef slaughter for the week, for example, it was down pretty significantly, down about 4%. Going to come in this week, estimated anyway, through tomorrow at 561,000 head. If you look at the hog side, they were virtually flat. But I will mention this, Meg. I don't know what to read into it. It's still early. We're what, 6 weeks into the year, but both are down pretty significantly year to date. Beef about 8% and hogs about 6%. So again, I think it's early, though. That's not going to persist throughout the year. But I do think it's worth noting that we're down a fair amount year to date, and I think some of that may be weather related to the first part of 2025.
There's definitely been some weather issues throughout our area, in even then as you get further west and north as well.
For sure. It's been an interesting winter. We've said that. We've had snow places that don't typically see snow. We've had cold weather and my goodness, the rain. I don't know that we can handle all this rain that they're talking about for our area, but it's coming whether we like it or not. So yeah, weather's been its usual wild card.
Definitely a chance to alleviate some of the drought conditions that were in parts of the country.
Done, right? But
All right, we're going to talk supply and demand. That's the big report that came out this week. As you dig into those February numbers, Kenny, um, talk to me about beef production and where USDA is coming in there.
so I'll kind of do this. I'll talk about what changed with their projections from January to February, and then we'll kind of put that in perspective by comparing it to 2024. I think that's the best way to think about it. So if let's start, I guess, with the beef production. So they raised 2025 beef production forecast by 3%. But again, that's mostly due to the resumption of live cattle imports from Mexico. So for some explanation, the way that they do that, they kind of assume current policies are in place. They don't try to forecast change. So in other words, they did not have that built into the January estimate. They did the February estimate. And of course, it's also worth noting that, for it to impact beef production in 2025, those cattle have to enter sometime probably early in 2025, right? So you've kind of got those things to remember. Um, so that's the change from January to February's estimate. Um, I like to think about it this way better. Their current estimate for 2025 would be down 1.6% from 2024. And that's an interesting number. It's tough to forecast, obviously. We've talked about the imports on the live cattle side. But the other thing that we got to think about when we think about what 2025 looks like is, we had, fewer feeder cattle last year. We're going to have fewer feeder cattle this year, right? So the question kind of becomes, can we push weights higher like we did last year? That's a big key question. And then watching female slaughter too, right? You've got when the January inventory numbers came out, there's obviously an estimate for beef heifer retention, but there's also some estimates of heifers out there that are not, that as of January 1 weren't intended to be replacements, right? But it's also possible that some of those could be, right? You've got some, maybe you've got some heifers out there on wheat pasture, for example, in some sort of backbrowning program. If weather cooperates and prices stay strong, you can see scenarios where some of those heifers that weren't intended to be bred become bred. So to me, those kind of things are kind of factors that are going to drive that. But they're going to have it. They've got us estimated right now down a little over 1.5% from 2024.
I think the bringing in the retention part of that conversation is so interesting because it's something maybe we don't think about at first blush, right? Like we're going to hold heifers back. What does that mean for beef production? And that could have a pretty significant impact on what we do in 2025.
Absolutely. In fact, I would almost argue that that besides weights is the biggest thing. And let's not forget cow slaughter either, right? That's the other piece of it. We think about beef production. Cow slaughter was lower last year. It was way lower in like the fourth quarter. I don't think that we can take cow slaughter lower enough again for us to actually see beef cow numbers increase throughout 2025, given how many heifers are out there. But one thing to watch is how many of those other heifers, that weren't necessarily intended to become breds actually end up entering the cow herd in 2026. That possibility does exist.
Which means that livestock slaughter report also becomes an integral part of or continues to be a huge part of our conversation moving forward in this year to figure out what's going on with the cattle herd.
Absolutely, and the mix there between cows, steers, and heifers.
Pork production also in USDA's numbers. As we take a look at those, it sure looks like we are producing plenty of protein in this country.
We are. So the forecast for pork production was essentially unchanged from January to February, up just a tick, but not enough to even call much of a change. But the perspective again that I like is compared to last year, and they're projecting us at 2.7% higher than 2024. And if you look at red meat as a whole, you look at the combination of Meats across the board, excuse me. So if you look at meats across the board, so beef will be down. We'll see increases in pork and poultry. I think that may be something that's got lost a little bit. Is just the resiliency of the consumer and how strong demand has been. Right? You take 2024 for example, which we have a pretty good feel for 2024 production. Beef was up a little bit. Pork and poultry were both up by more than 1%. So we had more availability out there, and yet we supported really strong prices. So I think that's the other side of this is that demand has been really strong. And I think it bodes hopefully well as we think about 2025.
We primarily focus on beef and pork or cattle and hogs here. I think that one of the biggest stories of 2025 will continue to be poultry and egg production. And that egg forecast is a little nerve-wracking, seeing what's going on. There was this week in Indiana alone, two flocks totaling over 2 million commercial egg-laying hens that had to be depopulated because of high path. How is this going to factor through the rest of this year?
Well, it's going to come down to, how many more of those that we have. If you look at what was done in the WASDE, they pulled egg production back 2% from January. We're obviously off year ago levels. Just being blunt with you, I don't know that those changes themselves fully explain the price jump that we've seen. And if you look at, for example, what they did, they had a 2% reduction in production forecast for 2025, but they actually raised the egg price forecast for the year by more than $1.50. That's kind of a wholesale egg price by the dozen. And I think part of it is, you've kind of got to use current price to calibrate. And I think a lot of folks have been shocked what we're seeing at the retail level. And again, there's the current, but there's also the expectation of what's going to happen. Right? We don't know how many more layers are going to be impacted. We just simply don't know. I did get a chance to talk to some folks who work with the WASDE earlier this week, and some of my colleagues in other states, and they were up front. That's a challenge that they've had. They're trying to build that in, but where we are is interesting in the egg market. And although we don't typically think about eggs as a competing product the same way we do other proteins, it is a source of protein, and it's becoming an increasingly expensive source of protein. So I think we're naive not to include it in the conversation that there is some spillover impact on beef, pork, and poultry markets, in my opinion.
And I think that retail conversation, that retail space is interesting because how many times are eggs considered a loss leader for a grocery store? Can they afford to do that at this point, knowing supplies have been so tight right now because of the spread of this virus?
And that's a really good point. And I don't know the retail dynamics that well, but you make a point about a loss leader that I think is important. It's true of a lot of our meats sometimes. They're used to generate traffic. The markets are so big. I try not to use anecdotal stuff, but on the same note, sometimes you kind of do. And you hear stories of eggs being featured at a price that is kind of below current market, and then they run out. Right. And it seems odd, but maybe there is some loss leader traffic generation, tactics being used, and it could be right. Bottom line is, given how eggs are moving off the shelf and how they seem to be in relatively short supply, if they're not priced at a higher level, you're probably going to see some shortages in certain places.
Consumer prices this month, if we take a look at those, kind of interesting to see how things are moving.
Yeah, so the January numbers came out. Just the straight across the board CPI up 0.5% in January. I kind of like the year-over-year comparison. So 3% higher over the last 12 months. They break it out a little bit. Energy, gasoline, and food were all higher. I thought kind of for this discussion, I'd specifically point out food because it's, the one that kind of applies the most, obviously, but pretty similar. The food index up 0.4% in January, and about 2.5% year over year. So, not the type of inflation levels that we saw a couple of years ago, but still north of 2%. So I think worth certainly keeping an eye on.
As we have that conversation about the demand element and knowing where prices are going, where is that? Is there more of a sweet spot to make sure where prices can increase a little bit and it doesn't result in a pullback in demand? But is that something that you're watching too to see how that all relates?
Yes, but I don't have a good answer to your question either. Right. I mean, we came out of an environment where, 5 to 9% was normal year over year inflation. If we're in this 2 to 4% now, that's still inflation, and it's probably above the long run average. But on the same note, it's very possible that consumers have become a little bit, I don't know if trained is the word, but they've kind of they're kind of used to seeing, some fairly steady price increases. So maybe they don't notice what they're seeing as much today as they would have a couple of years ago because the change isn't as drastic, perhaps. But again, I think it also speaks to just the resiliency of that consumer, right? You think about it, we produced more protein in 2024 across the board, and we imported more and exported less. So there was more availability, and we still had higher retail price. That speaks to strong demand. That's the definition of strong demand.
All right. I don't think we can not have the conversation this week about risk management. We have seen some volatility in the cattle prices, volatility really just in markets in general, and I don't think that that's going to go away anytime soon. So as you're spending your time with producers around the state of Kentucky and having those conversations, what are some things that they need to keep in the back of their mind as they're watching what's happening right now in the markets?
Well, what's happened the last couple of weeks. So basically, from the end of January to where we are now, I think is a good reminder that even in strong markets, price risks exist. And I was telling you earlier before we got on that I've got cattle market notes here Monday to write, and I think I'm actually going to write about this. But even in a strong market, and you go back and look at the last, so go back to January of 2023. So the last, what would that be? 20, is that 25 and a half months, maybe something like that. If you go back and look at that time period, the market's been on a tear, right? But you can still go in and pick several times when prices pulled back by at least 20 bucks a hundred. And I can show you a time period in the summer and fall of 2023, and really, I guess, in the summer, if you will, of 2024, when prices pulled back by more like 30 to 40 bucks a hundredweight. So even in a strong market, you've got price risk. And if your marketing times coincide with some of those pullbacks, the impact can be significant. So, we talk about a lot of strategies. I know we tend to gravitate towards LRP, but the bottom line is, thinking about risk management is always a good idea. Forward contracts make sense. I'm in an area of the state where forward contracts aren't real common. Internet sales with delayed delivery are something very similar. Futures positions, options, and LRP. They all make sense. And I think just thinking through what makes the most sense to cover yourself from downside price risk, even in a generally strong market like this one, is usually a good idea.
When you're having this conversation, whether you're in Kentucky or you're in Illinois or you're in Missouri, what are the questions that producers should be asking about when they're trying to figure out if they haven't been using these tools, what works best for them?
Well, the first thing is, know what's out there. What can you use? So just understanding simply, what are my tools? Are forward contracts an option? Can I use futures? Does LRP work for me? Some of your listeners may be in some states where they have access, for example, to the cow-calf revenue insurance product. I don't in Kentucky, but 4 states do, and I expect you've got some listeners that are in those states. So just simply knowing what's out there is step number one. The other thing that I encourage people to do is just do some basic price sensitivity, right? Run a budget or just simply look at cow-calf revenue if you want to be simple about it, and just start playing with prices. What happens if I shave 10 cents, 20 cents, 30 cents, 40 cents off of these calf prices or off these heavy feeder cattle prices? It can be pretty eye-opening sometimes. So for example, just kind of simple math, if I'm running a backgrounding budget for somebody, and they're going to be selling 800-pound steers and expected profits 120 bucks a head. just simply saying, okay, if that price is 15 cents lower than you forecast it to be, you're all of a sudden at a break even. And it can go into the red, right? So just understanding how sensitive returns are, um, to sale price, which is out of our control, oftentimes I think does a good job kind of driving home the importance of doing something to cover that downside.
It's really just kind of interesting to watch all of this happen again, right? Like, so we saw, I felt like we were on a pretty positive trajectory. We took a big step back, and we have been really just moving and charging forward the last few months. And it's just a good reminder that don't leave it on the table.
Yeah, a couple more things if we got time, I guess I'll say. One, a couple general thoughts is I like to encourage producers don't try to make risk management decisions in real time. And by that I mean, so first of all, there's nothing wrong with protecting yourself from day one. And it's easiest to think about this if I'm a background or stock operator, because there's kind of a defined starting point more so than a cow calf operation. If I'm a backgrounder who buys light calves and feeds them for 3 to 5 months and then sells heavy feeders, I can make a case that 75 to 85% of my cost are either incurred or sunk. I'm going to have to incur them on day one. So there's a lot of risk out there from the start. But if you don't want to cover yourself from the start, then I think you want to just avoid the tendency to just kind of watch the market and see what happens, because you get analysis paralysis. When the market's moving up, there's a tendency not to want to pull the trigger on a pricing strategy because you think, well, I can do better the next day or the next week. And when the market's moving down, you also tend not to want to pull the trigger because, gosh, I could have done better yesterday or the week before. So I think, as silly as it sounds, have some targets. If I can get LRP at this coverage level, at this premium, I'm going to grab it. If I can get a forward contract for this price, I'm going to do it. And then when you get there, don't think. Just do it, just act. And you'll kind of avoid that analysis paralysis that I referenced. And then lastly, don't be afraid to leave money on the table occasionally. There's going to be times when you're going to jump on a market too early, when you're going to buy protection and not need it, when you're going to forward contract cattle at a time, and if you'd waited a few more weeks, you could have got a better price. But we tend to remember the times we leave money on the table more so than the times that we protect ourselves from the downside, right? So in the same way, I don't look back and say, man, I bought homeowners insurance last year and threw that money down the drain. I didn't have a fire, right? We really can't look back at last year and say, was that a good risk management strategy? So I like to joke and tell producers in extension settings, when you make a risk management decision, reach up, grab the rearview mirror, rip it off the windshield, right? You're not going to look back anymore. You manage risk looking forward, not backward.
All right. Next week, we have livestock slaughter, cattle on feed. What are you looking for in that cattle on feed report?
It's an interesting one. Obviously, your placements for January are not going to include any feeder cattle imports from Mexico. So you've got that out there. Talked about that some today, or sorry, this week. If you look at the number of cattle that were included in the CME index, which is a pretty good measure, right, of feeder cattle movement, that was actually quite a bit higher this past month. So I don't know. I think on feed numbers are going to be down overall. I think placements will be down, but I wouldn't be surprised if some folks had placements higher. But I think most are going to probably have total on feed numbers down year over year again for February 1, Megan.
We will find out next Friday, and I think Charlie's up next week, so
Good.
it'll be a good week for discussion. Kenny, it's always great to see you.
You too. I enjoy talking with you, as always.
Stay dry this weekend.
I'll try.
All right. So I have a weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.